Let's talk about the FOMC Gold Global Equity Markets. William Lee, Chief Economist and Managing Director at Global Economic Advisors, now joins in. William, thank you very much for joining in. Gold and silver stealing all the headlines, so let me begin there. Do you want to make a prediction on gold, where it's headed? Are we in the midst of a secular bull run on gold? Or do you think after this kind of a parabolic run, maybe we're closer to bubble territory, if there is something like that, for gold in terms of valuations? Because in the past, we've also seen very severe drawdowns. So make a prediction for us on gold.
I'm going to make the same prediction that Chair Powell did, which is I'm not getting any signal from this, and we're not making any decision based upon what's happening to gold. And I think that's the correct answer for everyone outside of perhaps India, where there's an obsession with gold and jewelry and so India specific. I would say that given the historic pace at which gold has gone up, if you're looking for a definition of a bubble, there it is. So I'm guessing that a bubble though can continue for quite a while. So if you're willing to take the bet, go right ahead, enjoy the ride. But I think as a Westerner who's less obsessed with gold, I'd rather continue to worry about economic fundamentals.
Healthy obsession. You'd agree, right? And why not? We're obsessed with what's doing well, and gold's done well, William. But you know, it's also the fundamental reason, of course, is the fears of debasement and reserve diversification. I mean, I'm talking about central bank reserve diversification, and that is it speaks to so many other things. The rise in gold. I mean, typically a sharp rise in gold is considered to be risk aversion in that sense, right? For now, stocks are rising, but is there a signal here?
What little signal I take from it is a fearful signal. Historically, the times when gold takes this kind of a path upward and this kind of a desperate path upward is a sign where faith in social institutions and political institutions breaks down. And I hate to think that is a global phenomenon. So for me, given what I understand is going on with most political institutions and social structures that are around the world, as crickety as they are become, and as much social tension as there is, the panic to buy gold at this pace, if it really does foreshadow something, it's going to be something really big, and I don't want to be around for that kind of collapse.
All right, William, enough of gold. Let's talk about what happened overnight with regard to the Fed chair. How do you read the comments? Hawkish? Do you, wanted your comment on that? And how many more rate cuts do you think we can get this year, if at all any?
I think what the statement and the press conference did was confirm the fact that the Fed finds itself in a very awkward position, a position it hasn't been in since the 1990s, which is fast growth driven by the supply side or by productivity, which gives you an inflation buffer, which gives you a dampening of labor demand so that firms just don't want to hire more people because the workers they already have become much more productive. And we're in a situation where Chair Powell has said the inflation bulge that we see is mainly from tariffs, which is working its way through the economy and expects to peak by mid-year and subside thereafter. And I would think that if it weren't for the political overhang and discussion about Fed independence, we would have gotten a lot more votes on the cut side than we did this time. I think a lot of the members of the committee are fearful of expressing the judgment that given the lags in monetary policy, we should act now sooner rather than later. We should bring rates down below, or at least to the low end of neutral, because we need to offset that kind of secular dampening of labor demand and try to boost the interest-sensitive sectors to boost labor demand, create more jobs. And if it weren't for the fact that a vote taken to reduce rates today would be a vote taken to kowtow to Donald Trump, more members of the FOMC would have voted to cut.
Yeah. William, just one last question. We'll perhaps hear about the next Fed chair announcement in the next few days, right? I was thinking this week, but we'll see. But both mean lower bond yields, or you think one means different? Either of the two.
Well, right now there's really a bunch of outliers that can't be dismissed. Chris Waller, as much as people have dismissed him as a viable candidate, would really come in to serve as a Fed insider who knows the importance of independence, could satisfy people in saying that he's not a Trump acolyte. Would actually be a viable candidate, as would Kevin Walsh. So I think the candidate spread is really quite wide now. I know the betting market has Reader as the number one pick, but as such an outsider coming into the Fed, he would cause, I think, more uncertainty and more turmoil in the markets than any of the other candidates, because to have an outside practitioner like that come in, he's going to go out of his way not to do anything with monetary policy, but he'll be screwing around with the plumbing. I think he'll be screwing around with a lot of the technical aspects of the Fed balance sheet and Fed payment systems to just establish his credentials as knowing the Fed system, but also as not being under the thumb of Donald Trump.
All right. Thank you very much for joining in, William. And the other big story, of course, is geopolitically. Trump has once again threatened Iran, saying time is running out to strike a deal. And we saw crude prices inch towards $69 per barrel. So there was another surge in crude prices.